The reason we're all here, of course, is potentially this major deal in the retail space here in the UK. Two British supermarket titans, Sainsbury's and Asda, are now in advanced talks, we know, as the details of their £15 billion tie-up are due to be released over the next hour. Sainsbury's CEO Mike Coupe, who is a former Asda chief executive, is tipped to lead the combined group, which would continue to operate as independent brands.
The merged company would have 2,800 stores representing over 31% of the UK grocery market. This would top the current market leader, Tesco. The deal is expected to attract the attention of the UK watchdog on the competition front, the CMA, of course. Chief amongst concerns is the impact on suppliers. It's also thought the divestments may be necessary to secure regulatory approval. One thing I will say about the disposals is that's half the point of doing this merger. So I'd imagine they were on the agenda even before the regulators even looked at this one.
Synergies. Well, US retailer Walmart owns Asda, having bought the company in 1999. According to Weekend Reports, Walmart will become the combined company's biggest shareholder, but would not have a controlling stake in it. The two groups already share a link with Asda CEO Roger Burnley, having been an executive at Sainsbury's. So highlighting that there's a crossover in executives. Mike Coupe, of course, having had experience at Asda as well. What sort of scenario have you seen like that before, where you've had the boss of Sainsbury's be the CEO of Asda, effectively knowing both businesses that he's putting together? So quite a skill set to bring to the table.
Just 1 or 2 points. I mean, I've looked at this sector my entire working life as well, since the late 80s as well. And one period I want to concentrate in particular, and this is the Terry Leahy years, where they were the big behemoth, i.e. Tesco, of UK retail. And I just went back over a few numbers just to confirm something that I thought I already knew, and I did, i.e. the Tesco market share between the early 2000s, the early noughties, and indeed the 2011 and thereabouts was well over 30%. In fact, at one point, it was exactly the same as what is being deemed as the combined market share of Asda and Sainsbury today. Herein, so it was around about 31.4% was the peak market share of Tesco. This group is seen as having a 31.4 market share. So that is 1 point. So from a regulator's point of view, it's only as big as Tesco's ever was. The second point over that period when Tesco were absolutely at their height, their peak, so to speak, is you didn't have Amazon. You didn't have Ocado. You didn't have Aldi and Lidl in any meaningful size. So although people might say, oh, it's a squeeze on suppliers, there's going to be less competition. The fact is there is more vicious competition in the UK high street, supermarket, grocery scene now from the big players, I would suggest, than at any time over the last 20 years.
Absolutely. And that, I think, explains on an underlying basis why there is this drive to converge at this point. And headline numbers from Sainsbury's earnings, which are due out later this week, would suggest that the analysts think there will be a 6% drop on a headline basis in earnings from Sainsbury's. So there you see the motive for these companies to come together in this space, because scale, as we know, is critical when it comes to the supermarket business. This is a stack 'em high, sell 'em cheap type industry, and the trouble is there are the German operators who've been doing it out there more cheaply, and at this point the great British public doesn't seem to be responding to incentives at the quality end of pricing. The fact that we are now having come through, nearly 10 years of post-financial crisis rationalisation in the economy, people have become very accustomed to buying budget. And these supermarkets at the higher end now fear that this is becoming embedded in consumer decision making.
Which explains perhaps what the regulator might be thinking in the backdrop. But just make the point, does scale do anything for the share price? And the most recent acquisition by Sainsbury's was of the Argos business, and that completed around April 2016. You've seen the share price at best go sideways, at worst fall. So what's the point of bulking up? Is it just protecting the company from fortunes that might have soured when you look at the share price, or is it adding any value? And I've got to say the same thing about this particular deal. Will it add value to the share price? And Tesco Booker was the same equation. We all argued this around the set. We saw initial pop in the share price and then fell right back and declined at certain points. It's really down to the earnings that investors have been looking for, or this high street recovery where you can start pricing in margin. I don't know whether these deals are doing anything except providing a little bit of defence for Tesco and Sainsbury's at this point?
I think defensive, actually, there's two reasons for an acquisition. One is you're offensive, you're being aggressive, you think that you can dominate, perhaps like Amazon is doing with Whole Foods in that arena. The second is defense as well. How do we shore up our position? And I think this is very much in the latter category. They are reeling, as you mentioned, from the earnings fall we're expecting later in the week. This is very much in the defensive category as well. When they look, and the CMA does its survey about the geographical regions, they're going to see that Asda predominantly northern based and Sainsbury predominantly southern based as well. But the fact of the matter is, it's about store closures and it's about the pace of online growth.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.